Welcome back. Thank you, everyone, for tuning back into the Silver Bull stock update. I'm going to start off with looking at these awesome bars with silver. Let's start off with silver first. I've been trying to complete the guardhouse box of 50 1-ounce bars, and I was looking at these, and these are super nice. They're kind of expensive, about $35 a pop. Silver, as we all know, has been doing really well for the entire year. Let's go look at that really quick. The SLV that's trading. Now, this is interesting. Year to date, it's up 21%, which is still above the S&P 500. So silver's still doing well, but there is some downtrend, especially since the month of May. It peaked at $29, and then the second peak was at $28, and then this last peak was at $27. So we have this downward trend over the course of these last 4-5 months, and we already hit a bottom of 24.33, which I thought was gonna follow the silver spot price, but it actually didn't. Silver spot price stayed above it. So that was very, very interesting to watch. I've never seen that happen. Usually when this goes down, silver spot price comes down. So that was pretty interesting to see. It went from 24 back up to 27, and now it's starting to turn back down. My guess is that we're going to be probably seeing $24, $25 silver pretty soon. I talked about this last time from the 30 peak. It's already down $4 from the 30 peak. So I think it's not too crazy to say that silver is going to be heading back down for the rest of the year. We'll see if there's going to be a huge spike, but I think it's pretty much done and it's over with. That was the run that I was anticipating. It looks like I think it's just going to struggle to fight itself over the $26, $27 mark and keep above the $30 mark. But, these are just hunches and guesses. The S&P still doing well over, getting to the 20% return for the year. And, I was checking my accounts. We're going to get into those too. And my Berkshire B positions are doing extremely well, 31% year to date. This is crazy. If it breaks 500, I'm going to try to buy as many more as I can. I'm hoping that there's going to be some kind of crash. Everyone's anticipating some kind of crash in the stock market. Months go by before something actually happens, but if it does, I'm already trying to get situated to get some more money because these things are expensive. They're over $450 a piece, and if a crash was to happen, I don't think it's going to drop more than $100. If it does, I'm going to try to sell all of my other positions and get back into Berkshire Hathaway B. I feel like that is the banger for me. That's my horse. That's my ticket to retirement. The only bad thing that I was looking at is that when I came in with some money and I had to roll it over to from my 401k to a traditional IRA so I wouldn't get taxed, it went into that account, and that's where all the bulk of my money was. So I ended up buying some shares, but had that money gone into the Roth IRA, I think that it would have been much, much better because of the capital gains tax. There is none, but I get penalized if I move that money. Now, I'm looking into ways to see if I can transfer those Berkshire Hathaway B shares from my traditional IRA to my Roth IRA so that in the next 20 years it can grow tax-free. I'm looking at the back Roth, I think it's called Backdoor Roth, to see if I can get something, something to happen where I can move those shares over to my Roth. But in regards, I have some other Berkshire Hathaway shares in my kids' account, and then I think I just opened another brokerage account from Chase, and so I'm going to separate these. My idea is that my brokerage with Chase will be mine. My Charles Schwab account will be for my kid, and then I also use another account for my nephew. That's in a separate bank. So moving forward, I'm still bullish on Berkshire Hathaway B. I'm going to see what I can do to make that move. The S&P 500 doing well. It looks like if we do have a downturn, the S&P will still return 15% plus. So plus 15% year to date is what we're looking at for the rest of the year. I don't think it's going to crash heavy. If it does crash, it'll probably be in the beginning of next year, which is fine too. The beginning of the year always starts off kind of like small too. So, but again, if you're using your 5% yield account, S&P 500 would have give you a better return. And Berkshire, man, up to 30% return so far. The year's not over. Anything could happen, but still, very good position if you want to get into. A-Mark Precious Metals. These are the bullion dealers that own all of the bullion sales on online. The dealers that you see online, JM Bullion. Oh man, there's a list of these things. LPM Group, which is based out of China, I believe. Silver Gold Bull. Look at all these different. Think Gold Line. They got, I think I went through all this last time, but they have so many different subsidiaries. It's just not even funny. They're massive. When everyone starts buying bullion, they're the ones who profit. I already told you guys, if you're a stacker, you should probably be hanging on to some of the shares. It looks like July and the beginning of this month were probably the better times to get in. If you couldn't get in the beginning of the year, it was at $24. I remember specifically it hitting $24. I'm thinking, I can't, because you do need a lot of capital. And when you want to make a lot of capital gains, you need a lot of shares to do it. So it's not good enough to buy one share and just sit back. Yeah, you would have made a killing. You would have made 100% return almost, but at some point you would have probably made near 100% return, but then again, you only walk away with, an extra $30-$40 when you want to maximize that. You want to get in that 100 shares minimum. So enough with that. And then these are those beautiful bars that I saw. I'm digging them, but at $35, I don't know. I might bite the bullet. I might not. Bold Precious Metals has their gold 2024 Libertad coins. They just got here, and I was looking at them. I was like, oh man, I'm looking for the silver, but they haven't came out yet. So I think it was on their homepage. Let me see here. I saw it earlier. Where are they? Oh wow, it looks like they took them down. Anyways, I got the email and notification saying that, hey, the 2024 gold ones are here. I'm still waiting on the 2024 silver Libertad 1 ounce coin, so I'll be paying attention to that. I'm going to pick some up as tradition like I normally do every year. Wait for that. And then here's what you guys all been waiting for, my precious metal portfolio. Man, it's getting a little bit more complicated to keep track, because I have those 4 positions in here that are doing, one is doing well, some other ones are doing pretty bad, but overall we are down negative $75. So we went from positive $9, I believe, from the last week's video, to a negative $75 overall. And the one that's keeping me afloat is this Veralto. This was a spinoff. I talked about it in my previous one. I was following the hedge funds who bought in heavy. And I ended up getting 10 shares, but I ended up selling 2 of them so I can fund some averaging down into these 2 positions, Lithium America Argentine and Arcadium Lithium. The uranium and the lithium stocks are getting hammered right now, so start to pay attention to these. These 2 in particular, again, I was following money, and I believe I got them off the Sprott 13F filings. Right now, I think they got in at $4. So imagine if I got mine, I'm down to 303 and I'm still losing really bad. Let's look at the percentage. Lithium, I'm down 20%. And then Arcadium, I was able to average down and make it less than 20%. It's at negative 10%. So a lot of positions I can still average down. I don't want to add any extra money to the silver stocks, but I think I might have to, because at these levels, I have to just average down. I know a lot of people are commenting that, not a lot of people, but some person has kind of like put out that, it's a money pit. That's what's going to happen, is that you're going to keep putting money into these positions just to put money in, because you're going to lose if you don't. And I understand that, but in the beginning, and what I've noticed is that you can just keep averaging down as much as you possibly can. And at some point, the stock is going to turn around and it's going to run. And by the time that happens, you'll have accumulated a lot of shares, and making it a lot easier to make gains when the price of the share fluctuates from $1 to $2. If it runs to $10 and you've accumulated 500, 600 shares, that's where you will see a significant gain. This has already happened in my position. I again, I shared the story last time. I averaged down from a $9 down to $6, and then I had the stock turn around. At some point, you got to remember that these companies don't disappear. Now, in the silver sector, it's kind of wild because some of these companies will disappear. They only have a couple of people running them. But my thesis hasn't changed. I still believe that there's going to be a silver run in the stocks, even though that it's not correlated with the silver stock price. So the the spot price. So again, we're just going to average down, and I got to be careful. I talked about this last time. If it's not near a 52-week low, then I won't be averaging down. Some of these positions are, I'm losing really bad because I bought in so high, but I'm going to end up averaging down when I can. So the biggest winners right now are Hecla Mining and Gato. Those two, had I just put all my money into those two, I would have done really well. But so far, everything else is just kind of trickling there. Again, it's just a time where I can just average down, but I got to be super careful when I do. Like this one, for reals, $6.20 per share. It can go down to $2. So at $6.14, when I'm only 6 cents away, this can turn real bad real quick. So I will wait until a significant percentage is there to start averaging down like these two. The 25, 20%, that's where you want to buy really, really heavy and get that share price down. So that's what I'm going to end up doing moving forward. Everything else, I feel like it's there. It's okay. It's a waiting game. And I think that's kind of like the hardest part out of all of this is just waiting it out, and picking these opportune times to average down and not spending all your money during dips. That's very, very hard. It takes a lot of just experience and pulling the gun too fast and learning from your mistake to understand how to build patience when you average down. So, again, everything else looks good. I can't believe the amount of percentage NVIDIA is going. It's popping off. I commented on Miss Lisa J Stocks. As things start to really, really run, they get more and more riskier. I truly believe. Some people are like, dude, that's the time to jump on because you're going to take a ride. But at the end, and in my experience, I've just held too many bags, and I kind of stay away from that. I've kind of learned that it's not worth jumping in and then trying to get out at a good time. But all comes with, experience. Everyone's different. Everyone has different risk tolerances. So if that's what you do, great. I'm just sharing what I've learned and what I don't want to do. There's still times where I will take a risk and I'll jump in and then see if it runs. Kind of like this entire portfolio I started when I was about 5 months too late. In February would have been the perfect time. March, April, even May. But when I got into it, I believe last month. And it's a chance that I kind of missed all the gains that were gonna happen, but we're still gonna continue to average down, and we're gonna continue to hold. The idea is to hold long term, so we don't get taxed as much, and kind of see where this all plans out. I've been paying attention to all the silver gurus online, YouTube, trying to check out the Money Level show with all of his interviews, and it looks like people are still bullish. So I'm gonna continue to watch this and keep you guys updated. Happy blessings, happy stacking.